Hi everyone, I hope you all safe and healthy with your family and friends. In this video we are going to learn about 11th Standard Accountancy, Chapter 10, Depreciation Accounting, Exercise sum number 6. Let's read the transaction. That is, an asset is purchased on 1/1/2016 for 50,000 rupees. Depreciation is to be provided annually according to the straight line method. The useful life of the asset is 10 years and its residual value is 10,000 rupees. Accounts are closed on 31st December every year. You are required to find out the rate of depreciation and give the journal entries for the first 2 years. Okay, we have to look the 2 points. What are they? What they given here and what they asked to us. Okay, so they have given here they purchased asset the dated on 1/1/2016, that is January 1, 2016. The amount of asset is rupees. The amount of purchased asset is rupees 50,000 and depreciation provided according to the straight line method. The useful life is 10 years for asset. Residual value is 10,000. The closing date of the accounting period is 31st December every year. This is very important. Okay, noted. What they are required to us? We have to find out the rate of depreciation and we have to pass the journal entry for the first 2 years. Okay, first we have to calculate the rate of depreciation. What's the formula for rate of depreciation? Amount of depreciation divided by original cost into 100. Listen, we need to find the rate of depreciation. We have the amount of depreciation. So for that we have to calculate the amount of depreciation to find the rate of depreciation. Okay, let's find the amount of depreciation. The amount of depreciation formula is original cost minus scrap value divided by estimated life of the asset. The original cost is 50,000 minus scrap value 10,000 divided by estimated life is 10 years. We have to subtract 10,000 minus 50,000, we will get 40,000 divided by 10. We have to divide it. We have to cancel this 0 for the 0. We will get 4,000. So 4,000 rupees is the amount of depreciation we found. Okay, let's find the calculation of rate of depreciation. The formula is amount of depreciation divided by original cost into 100. The amount of depreciation is 4,000 divided by original value is 50,000 into 100. Now we are going to cancel it. This 20 for this 20, this 20 for this 20. 1 5 is 5, 8 5s are 40. So the rate of depreciation is 8%. Now we are going to find out pass the journal entry for purchasing asset and depreciation. Okay, depreciation of the asset. Okay, so whenever you purchase the asset, what is the journal entry? Asset account data to cash account. Okay, here the name of the asset is machinery. Okay, so machinery account data to bank account. Instead of cash account, we have to enter bank account for purchasing asset. Now you got it? Okay, when you purchased asset 1/1/2016, that means 1st January 2016. What is the journal entry? Machinery account data to 50,000 to bank account 50,000. Then we have to pass the journal entry for the depreciation of machinery. For the first year, we are going to pass the journal entry for the depreciation of machinery is first year. What is the end of the date? The closing date of the accounting period is 31st 12/2016. Okay, at the end of the year only, we have to pass the journal entry for the depreciation of machinery. Okay, what's the journal entry for depreciation of machinery? Depreciation account data to machinery account. The amount is 4,000 we find. Okay, the depreciation amount is 4,000. We have to enter here. Okay, then we have to, now we are going to close the depreciation account. That means we have to transfer the depreciation account into the profit and loss account. So for that, the profit and loss account data to depreciation account. Listen here, where is depreciation account? It is on debit side. To transfer it, to close the depreciation account into the profit and loss account, Here depreciation account is to be debited, it is to be credited here. Okay, depreciation to depreciation account. So profit and loss account data to depreciation account 4,000 dated on same date. That means closing date of the accounting period 31st December 2016. Depreciation transfer into the profit and loss account. So we transferred depreciation account into the profit and loss account. Now we are going to pass the depreciation of a machinery account into the second year. Second year means when you purchased machinery, when you purchased asset 1/1/2016, right? So on the second year we take the same date, that means 1/1/2017 for the second year. Okay. So what's the journal entry for depreciation of machinery? Depreciation of the asset, depreciation account data 4,002, machinery account 4,000, depreciation provided. Then for closing the depreciation account, we have to transfer the depreciation into the profit and loss account. So we have to enter the closing date of the accounting period, that is 31/12/2017. Profit and loss account data 4,000 rupees to depreciation account 4,000 rupees. Where is depreciation account here? On debit side. So we have to close it only. We have to transfer the depreciation account into the profit and loss account. From the debit side we have to, it is to be credited. Depreciation account is to be credited. So depreciation account transfer into the profit and loss account. Do you have any doubt? Please comment it on the comment box. Thank you. Take care.